It happened in 48 hours underscore slash, and nobody expected it. On Monday morning, September 22nd, 2026, Micron Technology underscore opened the market up nearly 20%. By lunchtime underscore slash, it was official. Micron had crossed a $1 trillion market cap for the first time in its 47-year history. If you've never heard of Micron, you're not alone. They don't make iPhones underscore slash, they don't build ChatGPT. But without them underscore slash, none of it works. Micron makes memory chips underscore slash, the HBM and DRAM that power every AI model running right now. This isn't just a stock story. It's the moment the AI supply chain became the most valuable part of tech. And it happened faster than anyone predicted. Let's rewind to Friday. Markets were closed for Labor Day in the US underscore slash, but over the weekend, three things changed. First, Marvell Technology announced record AI chip orders for Q4. Second, Dell leaked that their AI server backlog had doubled. Third, analysts at UBS dropped a note that shocked Wall Street underscore slash. They tripled their price target on Micron to $1,625 from $535. That's not a typo. Nearly a triple. Their reason? AI demand isn't slowing down underscore slash, it's restructuring the entire semiconductor industry. And Micron is sitting at the center of it. By Tuesday morning, the buying frenzy was on. Micron stock jumped over 18% in the first hour. Marvell popped 10% to new all-time highs. AMD and Qualcomm climbed 5%. The entire PHLX semiconductor index was up 5% in one day. But the real headline was Micron's market cap, $1.01 trillion. That puts it in the same club as Apple, Microsoft, Nvidia, and Alphabet. 5 years ago, Micron was worth $40 billion. Today underscore slash, it's 25x that. So how did a memory chip company become a trillion-dollar AI giant? The answer is HBM, high bandwidth memory. Every AI training cluster needs thousands of GPUs. But those GPUs are useless without HBM stacked right next to them. Micron is one of only 3 companies in the world that can make it at scale. The other 2 are Samsung and SK Hynix. And right now underscore slash demand is outstripping supply by 3 to 1. That's why UBS said the industry has changed structurally. This isn't a boom-bust cycle like 2018 or 2022. AI isn't a fad. Every Fortune 500 company is building AI infrastructure, and they all need Micron's chips to do it. Here's what makes this story different from the AI hype of 2023. Micron is actually making money. Their last earnings report showed AI-related revenue up 320% year over year. Gross margins hit 68% underscore slash, the highest in company history. And their order book is sold out through mid-2027. Investors stopped betting on the AI dream underscore slash, they started paying for the AI reality. And Micron is the reality. UBS wasn't alone. HSBC upgraded Marvell to buy the same day. Analysts are now projecting that Marvell, Dell, and Micron will all report record earnings this quarter. Traders are positioning for a full AI rally into Q4. But the rally isn't just about chips. It's about power. Training a single GPT-class model now costs over $200 million in compute. That compute needs memory. That memory needs Micron. Every dollar spent on Nvidia GPUs creates 0.30 cents of revenue for Micron. That's why the market is repricing the entire AI supply chain. And that's why Micron's stock more than tripled this year alone. Let's talk about what this means for you. If you're an investor, this is a case study in picking the picks and shovels of a gold rush. Nvidia gets the headlines underscore slash, but Micron gets the cash. If you're a founder, this is proof that infrastructure plays when big in AI. The flashy apps get attention underscore slash, but the companies solving hardware bottlenecks make the real money. And if you're just watching from the sidelines, this is your sign that AI is entering phase 2. Phase 1 was ChatGPT and hype. Phase 2 is real infrastructure underscore slash real revenue underscore slash real market caps over 1 trillion. But there's a risk. Memory chips are cyclical. They've crashed before. In 2018, Micron lost 60% of its value in 6 months. The difference now is demand visibility. AI data centers aren't building for 6 months / they're building for 5 years. Still, if AI spending slows down, Micron will feel it first. That's why analysts are watching Marvel's earnings this Wednesday. If Marvel beats, the rally continues. If they miss, we could see a 15% pullback overnight. So what's next for Micron? UBS sees the stock doubling again to $1,625. That would put Micron at 1.8 trillion / bigger than Amazon is today. Their thesis is simple. AI demand is structural, not cyclical. Every new model, every new robot, every new autonomous vehicle needs more HBM. And Micron is expanding fabs in Idaho and Singapore to meet it. The company says they'll double HBM output by Q2 2027. If they hit that target, the 1.8 trillion valuation isn't crazy / it's conservative. But the bigger story is what Micron's rise says about the economy. For 20 years, software ate the world. Now hardware is eating software. AI needs physical stuff / chips, power, cooling, memory. And the companies that make that physical stuff are becoming the most valuable companies on Earth. That's a massive shift. And it's happening right now. Let's break down the numbers one more time, because they're wild. Micron's market cap, $1.01 trillion. Stock price, $928.41 per share. Year-to-date gain, over 300%. UBS price target, $1,625. This makes Micron one of the best-performing stocks in the S&P 500 for 2026. And it's not because of a meme or a short squeeze. It's because AI literally cannot run without them. The question now is whether this is the top or just the beginning. Historically, when a semiconductor stock crosses 1 trillion, it pauses. But AI isn't a normal cycle. Every hyperscaler has said they'll spend $100 billion plus on AI infrastructure in 2027. That's $30 billion in HBM alone. Micron's total revenue last year was $28 billion. Do the math. For founders watching this, there's a lesson here. Don't build the app. Build the thing the app can't run without. Micron didn't create ChatGPT, but they own the part of the stack that makes ChatGPT possible. That's why VCs are now funding hardware AI startups at seed stage. Exaforce raised $125 million at $725 million valuation for AI infrastructure. Judgment Labs raised $32 million for AI agent QA. The money is flowing to infrastructure again. And for regular people, this is a reminder that the AI boom is real. It's not just Silicon Valley hype. It's showing up in stock prices, in earnings, in supply chains. If you work in tech, logistics, energy, or manufacturing, AI is coming for your industry next. And the companies enabling it / like Micron / are where the money is going. So where does this leave us? Micron just proved that the AI trade isn't over / it's just getting started. The next 12 months will decide if this is a new tech supercycle or the biggest bubble since 1999. But one thing is clear. The company that makes the memory for AI is now worth $1 trillion. And Wall Street is betting it's going higher. Thanks for watching. If this breakdown helped you understand what's really driving the AI rally, hit like. Subscribe if you want weekly breakdowns of the biggest money and tech stories before they hit mainstream news. And comment below */ do you think Micron hits 1.6 trillion next year? I'll read every comment.